options course that gives you a lot of these things for free. It's included with the Pulver alerts. Ratio spreads, some of my favorite trades for stocks that I want to own. To me, it's a bit more of it's a tweak on the cash secured put. It's a tweak on the naked put. It's the tweak on the wheel strategy that's very common. Ratio spread's one of my favorites because I get a little bit of a profit bump if price does go down for assignment, and I also generally take the trades with high income or high probability of income. Debit spreads. Look, I have a strategy video. If you're interested, you can hit the team up on Discord. Ask about like Chris Pulver's debit spread video. Ask Chris Pulver about credit spread video. I have a strategy session that I did on YouTube for like its 90-minute session. If I can get anybody to just open their eyes on trading the market directionally, you can trade up, down, sideways. I just want to teach you the difference between buying a call, creating a spread for a debit, or creating a spread for a credit, understanding the consequences, the lines in the sand of, if I take this trade, where does price have to be for me to make money? If I take this trade, where does price have to be for me to have risk or reward? Okay. It's just simple understanding and awareness of, if I take this trade, what has to happen? And my favorite thing about trading options is all it is time and price. That is it. Time and price. So all the wick highs and the wick lows and all the tests of levels and all the sweeps of highs and liquidity grabs and accumulation and distribution and all the fancy things with supply and demand, all that price action stuff is important. But to me, what's nice is my trade only has to rely on time and a strike price. That's it. So I have an exact line, and I don't care if price hits it 1,000 times. If my trade is still running and not expired, my trade is valid. I don't get stopped out. I have my risk defined from day one. The market could literally go to zero or go to infinity, and I'm only going to gain or lose what I put on the trade. That to me is awesome. I could build a lot of forgiving strategies with wide margins for error and also take very defined risk, right? Which I think for most retail traders would help them a ton, because most retail traders, unfortunately, when they lose way bigger, right? They lose way, way, way bigger. That's the problem that I see. Okay, so define that risk. Dollar cost averaging, like I said, 2022, we're down 10%, buy more. We're down 20%, buy more. We're down 30%, buy more. I know it's painful to do that, but it's allocating, right? In the next probably 12 to 24 months, I do think we're gonna have another 20+% pullback, probably more, right? And let's say that we go down 40% from all-time highs, wherever that is, and whatever the cause is, I don't know. But I want to make sure that I have dry powder to take advantage of it. Because again, if this is my watermark, buy in, and we ultimately get back to highs, all of that investment pays you and helps you compound where you weather the storm, you survive the drawdown, you get back to those highs again, and that investment pays off. Dollar cost averaging doesn't have to be huge, doesn't have to be complicated, but indexes at, I'm not talking about every 1% I buy the index. That's ridiculous. Every 10% I buy the index, because that's a great pullback, right? Every 5%, okay, fine. Maybe a bit more aggressive, trade smaller. Every 10, every 20, every 30, every 40, back the truck up and allocate. If we have a 40 to 50% pullback in the markets, I will probably be 75 to 80% invested at that point. Because to me, it's like all it has to do is get back to the all-time highs. And it's time. But if it gets back to all-time highs, that is compounding gains. That is far easier than trying to speculate on little day trades. The big basket climbs back to those highs. Collar trades, covered call trades. I talk about this with a lot of core positions. I sell covered calls to generate income. If I'm really worried about the downside, I trade a collar trade, which is I sell a call above price so I can still get appreciation and some credit, and I buy a put below price for protection. If I do a collar trade, I usually go out 30 to 60 days. And I rotate that collar and I keep going out. So if I always want downside protection, i.e. MicroStrategy, right? That's a high flying stock with high volatility. And if it's basically double leveraged Bitcoin. If MicroStrategy were to dump to $200, I want to make sure I can ride that put lower and lower my cost basis. But if MicroStrategy goes up to all-time highs, it's like, all right, well, I'll get it called away. I still make money and I get a crazy premium for selling calls. So a collar trade is the best of both worlds for me, which is I can protect the downside and I can still let price appreciate and give me the gain that I want, and I can still rotate it. Okay, this is one of the most important charts here for me for this presentation. Is we are here. Can you see me? Yeah, I can see it on the screen. You can see me like hovering around with this little blue dot, right? This is where we are right now. We're at 21 to 22 times earnings on the S&P. Type in where so you can see this. Okay, the reason I want to bring this up is this is the historical returns of the S&P. Okay, and these are at like 10 to 14 times earnings. Okay, that would be a crazy value. If we were at 10 to 14 times earnings, I would be way more optimistic about loading in to the S&P. But this little correction that we saw for a 20% correction in 2025, that pulled us back to around 17. So we went around here, like 16, 17s. Now you can see that they're mostly sprinkled of returns to the upside. But when we were back to 21, 22, 1 year out to 10 years out, you can see that these returns are very lackluster. Like from today, 10 years out, annualized, you're talking maybe a plus or minus 5%. So we could go down 5%, we could go up 5%, and that might be where we are at. So can you imagine for a second that your strategy of investing in the S&P 500 or the NASDAQ or whatever it is only going to make you about 5% a year if you just held the basket? That's going to suck. That's not fun. Okay? So my point is, if you understand that, but like this is why Nick said it, cautiously bullish. I'm cautiously bullish for this exact reason. We have a high priced market. The Buffett indicator of stock price valuation over GDP, it's like 211%. It's crazy high value, which means it's expensive. I still think we have the most liquid market. I still think we have the best market in the world. But man, it is not a discount. It's not a bargain. Okay, now can we run to 25, 26, 27 times earnings? Yup, we can, which is why this isn't why I'm calling the top. But it just shows you, like, historically over a 10-year run, returns going forward are not great, which is why I'd love to see some dips and pullbacks. So we have some positives. Yes, we have some positives. I mean, this is since 1985. There's a lot of, it's 40 years, right? There's a lot of numbers here. But between the upside and the downside, I mean, this is why the uncertainty is as high as it's ever been, because nobody knows, and we're historically like high valuations, and the returns are pretty much lackluster. Okay, surviving and thriving in 2025. Track your favorite assets. It doesn't have to be complicated. Look, if you see my portfolio, I trade a ton of stuff from A to Z. There's a lot going on in my portfolio, but also I have a bunch of accounts that I'm looking after, and they're all individually managed. So I've got to pick and choose whether it's an IRA account or a margin account. People need different things that I trade for. So I understand that I've got to be a little bit more conservative for some and more aggressive for others, but I try not to make it where it's like I can't handle this stuff. It's like I A to Z prune my portfolio multiple times a week. I mean, from opening closing bell, I am here in front of my charts. So I've got the time to go through, find good trades, sell options, or generate my trades for speculation, for growth, for income. And I do it on what I think is reliable and liquid, right? The names your favorite names, your household names you want to trade, stay with them, modify them. If you own the shares, consider trading some options around them to lower your cost basis. Consider having some downside protection. Use them as a tool. Options is a tool, in my opinion, to improve your cost basis. Okay, your favorite strategies. Look, like I said, talk to the team, read the Pulver alerts, get my practical options bonus course, and ask about the strategy session on long options and spreads, and I'll make sure you have that. If that doesn't at least open some eyes to oh my gosh, that's really easy. Like, option trading can be easy. Some of my favorite strategies are so simple, and I just do lots of them. Like I think I'm at 19,000 trades for the year so far. It's a lot of trades. Okay. But I don't do what's hard. I don't do what's man, I got to rack. It's like second nature. I can rattle off trades every day, go through the whole portfolio, clone all these trades, and it's 80 trades today. Not that hard, right? But I don't chase anything. Like, you want to share, Carvana, you want to share Palantir, you want to share AVGO, you want to share Oracle. It's I don't care about a stock that's up 20% in a day. I really don't, because either I traded it before the setup, or I'm not going to chase it after the fact. That to me is the dumbest trade ever. So I'm not that excited. Like, Palantir is great. It's an S&P 500. It's one of the best performing stocks in 2024. Awesome. You want to know where I want to own it? $40. It's way below current price, but that's where I'm saying I want to own it. Okay. And if I don't get assigned at $40, I just make income at $100 and some per share. I don't care, but I can still make money on it without having to sit here and chase, a high flying, crazy, volatile. Maybe I don't want to deal with it. I don't want the volatility in my portfolio. Okay. Steady risk, no over leveraging. Time is your friend. I'm telling you, survival in this market is greater than getting a big trade right. because the big trade, maybe it pays out, let's say, 10% of the time. That's 90% of the trades you're going to lose. And that's really frustrating. And unfortunately, all you see online from charlatans and, grifters and snake oil salesmen is you see one trade that showed, thousands of percent gain. It's like, but show me your real portfolio, right? Show me what you've been doing to have that one trade that paid out, and then show me, I don't know, maybe it's paper money. Maybe it's not even real, right? I mean, I don't have hero trades. Last year, you know what my hero trade was? It's not even a hero trade. It was MO. It's a dividend stock that pays 7% that happened to go up 20% last year. That was one of my best trades. It's so boring, but I made a ton of money on that last year. It was not a hero trade. I just allocated in for the intention of getting a dividend, getting away from it's okay. So if this stock can offer a 7% dividend versus a 3.5%, 4% bond, why would I not? I'll trade this. And the price went up. So instead of prices going down with a crappy dividend, I had a stock that went up with a better dividend. It was best of both worlds. But keep size consistent, manageable. I don't take a lot of risk. A lot of my trades, every single trade for 19,000 plus trades, a lot of them are fractions of 1%. It may sound boring. Look, maybe none of this resonates because this Chris guy doesn't take any risk. I mean, I do take risk. I've got a lot of risk in the market, but it's risk that I can handle. It's risk that I can handle emotionally. If this market takes a 20, 30% correction, I'll be okay. It's not going to be fun, but I'll be okay. What did I say back in March and April when the market was dumping? It's not going to be fun to trade through this, but we'll figure it out, right? And I don't know if the market's going back up to 62, 6,300 or getting all-time highs again and melting up where it's a bubble, or we're going to drop back 300 or 400 points. I don't know, and nobody else does either, right? Your prediction of the future is no better than anybody else. So we know nothing about the future. We think we want. I mean, there's good technicals. There's ways to kind of forecast, but it still comes back to risk management. Okay. This is what I'd like to see. If we get 3-5+% dips and pullbacks, I'm going to trade them as if I have room for a 15 to 20% correction. Okay. I think minor pullbacks will be noisy. I think we've got some good opportunities on the horizon. I think the market does roll back to like 5,900, 5,800 here in the next maybe 30 to 60 days. I'm going to look at that as an opportunity to align and add some more income trades and also participate in some dips. Keep grinding, keep grinding, keep grinding, keep trading, be consistent, small risk. Time is your friend. Survive this market. Do yourself a favor and survive this market, right? How about this? Survive this market through Trump. When he is no longer president in 2028, survive this market. It's probably, the market's probably going to go higher, but we could also have so much of a bipolar market where it's like we could go up 20, 30, 40% and Trump can, walk out with this legacy of like, look what I did, I'm the greatest president in the world. Or the whole market and world at him coming into office at a 22 times the earnings could be garbage returns that we're going to have to figure out how to trade and navigate with just lots of volatility and lots of ups and downs that nobody can really navigate, right? It's just so much unpredictability. I still want to make money this year. I still want to make money next year. I still want to make money the year after that. And I never know if the market's always a sure thing. The only time I felt sure in the last 25 years of my career would have been maybe a bit of the bottom in 2009 when I knew way less than I knew now. And the bottom in COVID, I was like, I looked at 10-year discounts on pretty much everything. And I felt like that was one of the safest times to buy. And it's nuts because the whole world was ending, right? Everyone thought nobody's going to go outside ever again. We're never going to see each other ever again. The whole market's going to go down. The financial market, the world stopped. But it offered up 10-year discounts. I was going to buy it. And that was one of the greatest 12 to 24 months run I've ever had in anything. But that was as certain as you can get. Now, I'm not certain. This market might melt up. It might fall 5, 10, 20%. I have no idea. But I'm going to grind and I'm going to figure it out.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.